so much appreciated for this opportunity. I feel it's a very good platform through which the stakeholders can have a discussion on this, because I believe as much as we are the regulators is that we have to work hand in hand and see how best to approach digital economy and the markets. And key for this is that we come from the perspective of where the challenges and the impact of digital economy in Africa is unique in its own way. Every jurisdiction you have its unique traits. So we also have to be very careful on the approach that we take. And I like giving the example of like Kenya, where mobile money has really revolutionized how transactions and payments are done. And from that is that the approach we would take might be different from what you might see in other jurisdictions. But going from the past, I'll stay from where we started. A whole element of looking at digital markets. It started from the entry of Uber in the country. And by this, there was a lot of clamor for the competition agency to do something, that the traditional markets are being interfered with, and what do the traditional taxi drivers do? And from our assessment of the matter was that we have always taken the approach, we don't want to overregulate. And at this point, you are keen on allowing first there to be entry in the market and then see how the markets behave. And over time, we have seen our approach in such sectors really yield fruits. For instance, right now in Kenya, we have over 6 tax hailing apps operating, and they're even going down to regions, to specific regions, that you find someone is operating only on a specific region, something we never thought that would achieve within such a short period of time. And also we are finding that people are using multiple platforms for themselves. So you find one driver has 3 platforms that they are using. Something unique I've seen is how it's moving beyond what was there traditionally just a tax hailing app. And you find some of the providers are now going to more of the driver welfare. They're starting to form cooperative societies that can actually empower the drivers, and also they can own more taxis to be operating. So from that, we had that approach. Over time, we have seen the growth of a lot of growth in the digital economy, especially when it came to COVID period. There was a lot of expansion in markets that people are doing now, transactions online, goods are being delivered. And we feel that for an agency, where do we start from? Because for us, we have always come from the point of, first of all, let us understand this market. Let us not rush and start regulating before we have understood the market. So a key element of our focus has to be research in this market. And our market study have been different in a way. Because for instance, you'll find, once we find what is ailing and what we find could be quick wins, we have gone ahead and implemented that. I'll give an example of a recent study we did, in the banking sector, together with the central bank and other financial regulators. And from this study, our focus on digital markets or on digital lenders was mainly, first of all, to understand what are the challenges that the people are facing? Where do we come in? And a key element of it was that we couldn't even know who are the providers that are there. Even if you're trying to reach them, the most difficult thing was to know what are the numbers, where do we find them? And a key recommendation of our research and study was that, first of all, we need to have a mechanism through which we know who is existing in the market before you even determine what do they have market shares, what are their strengths. And as a regulator, we saw that this is a very good recommendation that can be approached from the perspective of the central bank. And through this, we have been able to actually start the registration of digital lenders. So that, for instance, as a regulator today, if we are finding we are dealing with a merger, we are dealing with a market conduct practice, we can easily know whom do we contact, where are they located, where are these complaints coming from, what are the likely practices that we can look at. So for us, the perspective of first understanding who is in the market and what are they doing in the market has been very key for our approach. And we find that some of the challenges that we had with consumers, because also we have the consumer perspective division of it, is that they have actually been solved simultaneously as we are trying to look at just people registering. Because with the regulations that have been put in place, not from a CAK perspective, but from central bank, is that we are finding that the issues we could find consumers keeping on complaining that they are being bombarded with messages in terms of someone has not paid their credit facility, that is being looked into. And with the regulators now, because they are known, they are no longer doing that in the market. They find that one has really decreased in the market. So we find even without putting any regulation specifically for that one item, that practice has already decreased in the market. Also, when we look at a key perspective of competition regulation in terms of market definition, And what we have done so far is that we reviewed our guidelines in 2019-2020. And the key element for this was to try to capture the new elements of the markets that are there. They are non-price markets. These are double-sided markets that you require to check as like, what does the impact of one market have on the other market in terms of digital platforms. So we are really keen, we are really keen on actually improving on our guidelines so that to ensure that we are able to establish and also make our stakeholders aware that when you're looking at a specific market, for instance, one of the transactions we had was a purely a data-driven merger, where a platform that was existing before closed shop was no longer existing, but someone wanted to buy the platform because it had a lot of data in the background that they could use for their business. And a key thing for that was us to trying to establish what are the thresholds for this. So do we say that because it's just data they are buying, that it has no value? And that also brought in a key element of one of our changes where we have reviewed our guideline, our merger threshold guidelines, for instance, to ensure that assets also become part of what we capture in a transaction. And our asset value is not based only on the book value, it's also what are you buying. For instance, today you find someone might be buying a very basic IP, which might look very basic to the common eye, but the IP is valued at $1 million. So we'll be asking, why are you looking at buying this asset? And the same rules have also allowed us to call in for such transaction. We find a transaction that maybe would have been excluded from notification, we are able to call it in and also review it. Also, we look at the element of the killer mergers, because if you look at the digital markets, also have an element of this. A very big company is trying to buy a small company. So these have been elements that we have reviewed within the guidelines and the thresholds to ensure that we are able to have a view of these transactions. And a key to point out is that of all these transactions, we have, apart from one that we approved recently with conditions, and this was mainly because in the digital lender was buying the traditional form of banking. So we had a mobile digital lender that is buying a traditional bank. And the conditions were mainly to ensure that the two book loans are kept separate because of credit referencing bureau. So we have been keen to allow the transaction to go ahead, but we have been monitoring. So what happens after this? And we have found out that like some of these transactions have really helped to grow the businesses that have been acquired and move them forward. However, there's still the big discussion in terms of can we find players being dominant in this market? Are they behaving as we would expect them to behave? And for these, the discussion around competition authority is about in terms of looking at strategic market position. Do you have a position that you can be able to influence what's happening around the market without necessarily being dormant? So we are still at the preliminary stages of looking at this. And also, from what I indicated earlier, we want to confirm exactly. For instance, if it's a market, because we don't want just to go in and say company X has a strategic market position, but in what markets do they have this? Because they could be having a very strategic market position, let's say, in one element, but on the other end, they are not a major player. So it's very critical for us to be very clear on what areas we are looking at in terms of this. Another key element I would like to say about our approach has been to look at also the benefits. Because going from our mission and vision, by the end of the day, we are trying to create an efficient, globally efficient market for our consumers to enjoy. So what are the benefits of some of these, even the big platforms that have come in? And I would like to give an example of where, for instance, before in Kenya, for a very small SME to be able to advertise, they had to pay not less than $2,000 for them to be able to advertise. The same platform right now is able to pay only $10 and be available to over 1 million subscribers over 5 different platforms. So as a regulator, as we are approaching and also we are trying to rein in on the practices that are there in the market, we also don't want to lose the benefit that has come with this. We have seen very small businesses establish themselves, become big businesses, and naturally from there, they are being bought off just from very simple basic advertisement that we find, like for instance, in social media. So we also don't want to regulate, and on the hindsight, we lose the value that has come in for the basic common consumers. We look at also the element of substitutability. For instance, if I was to give an example of, and I believe today there has been the big ruling for Google, but you look at it from 2 perspectives. What is the impact of Android in not only Kenyan market, the impact in the whole of African continent? How many people can switch in from an Android phone to an Apple phone for less than $50? It's practically impossible. When you look at what is being used mainly by the communities. So as much as we'd like to very much read what is coming from Google, we also have to domesticate it from our end and see what is it can be of benefit to our consumers, that we do not just rubber stamp and photocopy what has been done in other jurisdictions, just to show that we are doing something as competition agency. So this is one area that we have to be really focused in terms of how best we take our approach. And that's why we have not rushed to outright regulation, but first of all, fully understand the markets. Towards what you're looking at the future, there's a lot of regulation also coming in. Look at in terms of data protection. Right now we have an Office of Data Protection Act, the Office of Data Protection Commissioner, in Kenya. And this plays a critical role in this whole digital economy, because data is a key driver of this. And it's an office that we have to work hand in hand. Both the CAK, the data we get, how we analyze it, and also from the perspective of like, how do we push people to provide data? For instance, if it's a case we are dealing with of market conduct, are the parties allowed to provide us with the necessary data from that perspective of the regulations that have been put in place? And what are the harms that can come with that? So it's something we have to work in as a data processor, and also from the data that we are getting from the people. Also, the other thing is in terms of services that are delivered to governments. Like you find in Africa and like now in Kenya, we also still the biggest producer, we are the biggest consumer, of some of the products of the companies. We were doing a small study the other day, and we found out that almost every government machine in Kenya has Microsoft Office in it. So today, as we try to ram into, let's say, if in any case we have an investigation with such an entity, what would be the impact on the reverse on government delivery and its services? And also the overall big government agenda that, for instance, like now we find the current phase of government in Kenya is trying to push everything digital. We are trying to say that we want to provide internet to as many people as possible. So with such elements coming in, and the big players are not being left behind, you find like when we had the advent of COVID, that they were willing to give, for instance, certain services to government institutions for free. So it's a catch 50-50 that as a regulator also, not coming from our continent, how much can we push forward with regulation, ensure there's a balance with the overall government agenda, and by the end of the day, ensure that our consumers are benefiting, that the product, whatever comes in for them, does not actually end up harming them, but it actually brings more benefits. I'd like to stop there for now, and we'll continue the conversation.